The Federal Reserve is still forecasting a recession in the fourth quarter. So why are stock markets going up so much? Hello, ladies and gentlemen, and welcome back to the Daily Show where we talk about stocks, commodities, and cryptos. As we know, next week kicks off earnings season, one of the biggest events of the year, and often the earnings report that ends up bringing the markets down. We're in the weakest 3 months of the year, starting from pretty much the middle of July. The next thing we know is forward PEs are starting to get a little bit out of control. When we take a look at the mega caps, that is the Magnificent 8 in this case, it's 31 forward PE in comparison to the rest of the market, which is trading at 16.5. So what should we be doing moving forward if we do see a pullback to mean reversion? We've got that along with the things that are going on underneath the hood with dark pool activity. Let's take a look and talk about it all right now together. Well, welcome back everyone to the Daily Show where we talk about markets around the world. We'll be covering the macro, latest news, and of course the hottest charts are coming your way for all of the major markets. Semiconductors were the big one in the last 24 hours. They sold off relatively aggressive due to probably the idea or concerns of a trade war. And then on top of that, we also had utilities, a defensive sector we often look at for the signs of a turn in a market, having a good session. We'll watch those on the charts a little bit later on. But if it's your first time here, welcome to the community. Subscribe, smash that like button. There's a lot to cover today. Let's get into target rate probabilities. So we know that the meetings minutes from the Fed basically showed us that a lot of the members wanted to do a rate hike in June. They chose not to, but now the chance, according to interest rate probabilities, is 88.7% that we will get a hike in July. I think most of you will probably agree with that. Let us know in the comments down below. Are we getting 2 more rate hikes or just 1 or even 3? I'll maybe poll that at some point with the community and we'll see what everyone thinks. We also know that calls are coming in at this stage into earnings season. Yes, we start that off next week. And as we know that this is one of those things, is it a buy the rumor, sell the fact like other years? Well, according to JP Morgan and Goldman Sachs reports, we're starting to see too many calls in the market from small traders. That's usually you and I. What about stats? Well, stats would state that we have had one of the better years on record so far, and that actually if you're a bull, generally the next 6 months do end up being okay. And if we actually scroll through a pre-election year, what tends to happen here is we get a little bit of a jump into the middle of July and then often a sell into that portion, going into the weakest 3 months of the year, which tend to be August, September into October. But October starts a pretty big rally. So if we do get a sell-off to mean reversion, you've got to be wary of that one. I've noticed everyone's starting to talk about how good July is. It's a pretty well-known stat in the markets. The problem is pre-election year, as you can see here, is nowhere near the normal average return for July. So keep that in the back of your mind if you could. Another thing, don't give up on the rally yet. If you are a bull in the markets, again, even though stats start to get a little bit more negative over the next 3 months than normal, by the end of the year and 6 months' time, you tend to have a very bullish market with above average returns for that period. What about the Fed funds rate futures? We know this has changed. As we can see here, the purple line's basically the Fed dot plot now, with cuts only expected in 2024 and nowhere near the terminal rate that was expected back in March. It's a great chart if you want to pause it here and take a look at it in a little bit more detail. So let's discuss volume, because this is something that we need to be talking about. We had a dark pool transaction of fairly large size coming in for some of the major tech stocks. We see here iShares Core S&P 500 ETF, IVV, getting a fairly large sell on it at the highs. Well, we assume it's a sell. It could be a buy, getting ready for another large move, but it's happening right at the highs. What do you guys think? Do you reckon that's a sell or is it a buy in these markets? We've also had a little bit of rotation through markets recently, which has shown us that possibly some funds sold last week in a little bit of quantity. If that continues through this week into earnings, it could also show us that it is a buy the rumor, sell the fact. And here are the performance dates for July. You can see pre-election and post-election years or normal years, how things perform up until around 10 trading days of the month. Some interesting stats there for sure. Fear and Greed Index, extreme greed, no surprises there. I'm sure we've been following that for a while. And we'll move over to options. And what we saw in options was a little bit of unusual trade in a couple of stocks. Meta in particular had some large trades in it. Went up 2.9% as they bring out the Twitter killer. Will it actually work? I don't know about that, but 1.85 times daily volume on Twitter announcement, or the new Twitter announcement. And then we get Zoom as well with some unusual activity on the put side this time. This has been one that's had some activity on it, generally speaking, recently. We've been talking about this stock in particular. Everything else, mostly just kind of like the normal or even under the markets. We've followed PayPal. We'll check that one out a little bit later. But I don't think there was anything super unusual from those options. Let's move to the last 24 hours and the last 5 days of trade. Do we get any idea that the market's turning defensive? Utilities is now not the worst performing sector. It's actually improved. Staples still low and healthcare still low over a 5-day average. But where things improved was the last 24 hours. Utilities, healthcare, and staples all finding relatively strong ground, with utilities being the best sector on the day. If this continues again for the next session and possibly even the next session, what could that mean? It could mean defensive rotation by the street, and we need to be aware of the price action that then happens after that, especially considering where the S&P 500 is, which we'll look at soon together. So just before we jump into the charts and we take a look at all of the key levels that you should be watching right now, I'd like to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you're from New Zealand, you're in luck. If you're from everywhere around the world, check out the special offers as well down below. But New Zealand audiences will not only receive additional Microsoft stock if they fund with the minimum requirements, but also zero fees, zero worries promotion as Tiger Brokers go into New Zealand. Now, why would you possibly want to consider Tiger Brokers? Well, we've talked about the additional features that they offer that some other brokers don't offer. One of those that I really like is, of course, being able to set multiple alerts within the platform. You can do so by just right-clicking on your charts, going to alert, and then setting it with some notes and everything like this. The thing that I always talk about on this channel is patience, react, don't predict. How do we do that? We set alerts and we figure out whether markets are doing the right thing for our specific trade style. Now, if we have a look here at this particular chart, which is Tesla, you can see that the market has gapped up after that good result. And then we are now sitting around this price. If suddenly we gap down, I would like someone to pause the video right here and you can put it in the comments. What would you be seeing? Technically, it would be what you call an island reversal. Now, going against trend is always a little bit harder. If this was an island reversal, such as this one down here in the direction of trend, it's a lot stronger. But these are the types of things that you're looking for in the markets. Setting alerts can be one of the extra features that you can do. Also, analysis, hold recommendations from, of course, the biggest economic houses around the world. You get a bit of an idea of where they're doing it. You can see here a whole bunch of cash flow statements. And of course, you can dive into these by clicking more and then bring up anything from fundamental valuations, financial segments, summaries, filings. They're all there within the Tiger Brokers platform. Check them out and the links down below for the special offers. So let's jump into the charts. Let's begin with Magma. Did we see any selling of the big tech stocks? The answer is not really. We're looking for mean reversion here on this one, which is back to the 20 moving average. And the way that it can go to mean reversion is either selling straight off into it, or it can actually just go into a holding pattern as the 20 moving average moves up into a new accumulation for a breakout up. I think there's going to be some volatility coming through in the next month purely because of earnings season really kicking off a bunch, and we'll be watching that one quite closely. The VIX had a small spike on it, up 3.5%. It's still sitting around 14. These are obviously post-2020 kind of lows, so the VIX is completely complacent at this point. The skew got crushed again. That's a good sign if you're a bear. That's the type of thing you want to see, and effectively it shows you that people are kind of, again, starting to, get a little bit more complacent in the market. And this is consistent usually with a turn in markets. We saw the skew get crushed the other day. The market sold off soon afterwards. Then it rallied to a new high. Then it's kind of sitting there with a gap, possibly creating an island reversal. Will it then sell off? We're very close to key points. 4,500 and 4,530 are certainly a pretty big zone for bull case scenarios here. And bears are looking for an island reversal to happen over the next couple of days towards the short. It's not a good stat, though, to go against the market right now. But again, pre-election years, it's not as bullish as you might think. PCC, we saw a bunch of, it looks like puts actually come through in the last 24 hours here on the PCC. So maybe someone's put in a couple of larger positions in anticipation of maybe some weakness coming through the market soon. We'll look for that over the next 24 hours. Qs, you can see here, based on our central bank liquidity, still very far away. One of the furthest movements we've seen really in the last 3 years since liquidity became such a big thing from central banks. I would say it's too far away from a swing trader perspective and an investor perspective, but from a day trader or a scalper perspective, you just want to run with the trend or run with at least the main rotations that you see going on. Yield curve has slowed a little bit. So again, when we're looking and talking about yield, the thing that's going to freak the market out is most likely a new all-time high here for the last couple of years on US 2-year yield. Look for acceleration of the yield curve. If that happens, maybe based on jobs numbers this week, non-farm payrolls this Friday, if you're interested. So that's the unemployment numbers. And if we do see an acceleration in yield, that's going to be really the main storyline. It's not so much that we're moving up. That doesn't scare the market. It's acceleration or deceleration the market likes to look at. Copper had a good trade, bullish over the last 24 hours if you were looking at that. Then it rallied back up to this point and found instant sellers. So again, this is going to be a big point. At the time of this recording, it looks like copper really wants to actually float back down. Maybe new lows are on the horizon and copper is actually weakening here as maybe we're going into some disputes and other problems in the world from more of a geopolitical standpoint. Dollar index had an okay session. When we move over to the DXY, it strengthened through all of this news, and it actually ended up closing just a little bit higher on the daily. It looks like it wants to go to our 61.8 and back into this supply. And as we talked about, there were no really, other than the shorts that were here, and if you had taken a short at that zone, you should have broken even the trade at this point exactly. You would have lost that now over the last 24 hours, as in been broken even. $0 loss, hopefully. These points were where we were looking for a real breakout to occur, and it just didn't happen. So it looks like the dollar is kind of, I think it's looking for a bit more bullish action into our further higher up supplies. I'll be watching that very closely. Gold managed to just get there. It got into our red box, and boy, oh boy, did a seller come in hard. As soon as it hit the red box, literally, it sold off 1934. This supply remains very strong. And what that's good for is it's actually good for gold bulls as well, because what you've got here now is a bunch of wicks. So you know that if markets breach this and close above, the close will be the key. That's a better sign that gold's actually bottoming off at these zones. For now, the bears are still in mostly control of gold. We'll find out what happens with the jobs numbers this week. That's going to move gold quite a lot. So if you're getting into small time frame, scaled trades, you might be careful because non-farm payrolls is well known to move that stock. Tesla traders, well, you're probably still feeling pretty good about the world. You're up another 1%. You do have a gap up now, though. So if the market chooses to go negative in one of these futures and just floating around here, it could give an island reversal to the negative side. And you'll notice that's in a lot of stocks at the moment. Do I want to trade Tesla short? Well, it's all about risk management. How many times would you win this out of 10 is always a question I ask myself. If I saw that, could that be a stop loss hunt based on these news? Yes, it could. It's counter. You're probably only going to win it maybe 50% of the time. So because of that, you would have to make it always pay probably more than a 2-to-1 to make it worthwhile taking that trade consistently. This is just an interesting point, but if it does gap down, especially underneath like a 275, technically that's an island reversal. Would it continue on? We'll look at the S&P because that was one that almost really was starting to move there on that particular premise. Let's move over here to semiconductors. They sold off. They created a bit of an evening star style trade here with a gap up and then a gap down. That would usually post to further weakness actually in the market when you see that type of trade. It's a candlestick formation. It is what it is. We ended up getting a close on the lows here for it. It's only marginal, and of course, there's no technical swing trade or anything like that at this stage on semis. So semis still very, very strong in this market on balance. Utilities did pretty well on the session. They actually were the strongest sector, so they managed to come back up, which is kind of nice. They've had a bit of a tough time recently, but they're starting to almost outperform the NASDAQ in some ways. If the NASDAQ falls like 2%, utilities would actually be in front if it just kind of held and sat around over the last, I think it's almost month. If we go to PayPal, we can see here PayPal is one of the stocks we've been looking at recently on the bull side, more of a speculative position. It had an okay day, up 1.1. The other ones we've been watching recently, Zoom, doing nothing much, down about 0.94, and SoFi putting pressure on the downside. If we were looking for momentum trades, we got asked this question on our Monday stream, which we do every Monday for the live stream. We'd be looking for the market to go through 194. And yeah, that would be probably the biggest deal. By the way, we will draw the prize. A few of you sneaky guys have entered a bit too many times, so I've got to remove some of the double entries, but that will happen on our Friday video. So don't worry, we're still drawing the prize, and those are, of course, for a bunch of our courses for free. Thanks very much for, of course, supporting the community, and I'll get rid of those double ups. Don't you worry about that. Oz 200, it's a few sneaky people. Oz 200 here, we have the 61.8 fib getting retraced. That's more of a copper trade and possibly, again, geopolitical stuff coming into it. For the ASX to move down to 6,900, it's going to need to breach 70,000 or 7,050, which is going to be the big level there. It does look weak at the time of this recording, and obviously this is where we expected further weakness to come in. ASX, I've been saying it's weak for a while. You know, I do want it under 70.50. That would be better just to see that come through. Will it do it? Maybe we'll find out very, very soon. The DAX, take a look at this. Now, the German market is at all-time highs, and at the same time, it's doing this. Now, it looks very Wyckoffy. We've got like this break up here. We also have, you know, a bit of weakness starting to come in. Now, I know the DAX is pretty used to doing Wyckoff style setups because we had a monster one over here, which you can see what a beauty that was, and it had some great rejections. At this point, we've got something very similar on the daily and the 4 hour and all of those types of markets. I'm interested to see how this closes at the week. And of course, we're looking for a break and close underneath 15,600-ish, 650-ish at this stage. US 2000 hit the most traded zone, sold off. Few eagle eyes in our private room were all over this one over the last 24 hours. I guess it's a good level if you were going to just pull a short. I like to go replication on this. There was a trade that you could have got after it rallied back up. If you were going to short, that wouldn't have been too bad a zone. But it looks like it's coming down at this stage, and this will be the first kind of buy zone for it. So if you're looking at Russell buys, you're looking at this kind of little block in here or possibly in here, and you're just basically looking for, you know, directional trend change based on your systems. At this stage, though, it is negative into at least that block. Let's move over to the US 30. Again, supply, resistance, whatever you want to call it here. We're at the point of that. Could we sell off here? Absolutely. Could we create a double top, e.g. this type of thing? Absolutely. We don't have that much information from the Dow. It's been a bit useless. Let's move over to the NASDAQ. Now, this was an interesting one. Look at this. We come up and we tap this high, and on the futures market anyway, we create a giant long leg doji. So basically, we have indecision at the peak ahead of news coming out in the US. That always is the way. Yeah, we're always at a critical level just before news that allows, you know, big rotation to come in. It's starting to sell off here at the time of the recording, but we're still kind of stuck in that zone. But people that sold up here on the high, having a little bit of a sneaky scalp, you'd probably be happy with the price action right now. S&P 500 is outside of the Bollinger on the weekly. That's fairly rare, and it usually signifies mean reversion or at least a relative decent turnaround or stabilization is due. So at the time of this recording, we closed up here. And what was interesting about this one is this is a weekly. Let's have a look at the daily here. So one thing that almost happened, and the market did open up down, but one thing that almost happened is this almost actually gapped below. It was something I was talking in the private community about, which was a gap up, and then we were kind of sitting, and I'm kind of happy it sat here for another day, which allows maybe the futures to do this. Will we get a significant gap low, giving an island reversal off a new high? Again, being bearish in this market's incredibly hard, so you got to make it pay off enough times out of 10. But yeah, it actually floated back up quite a lot before it opened, and it basically opened around this zone. For it to really activate proper island reversal, you're probably going to need it to be dropping off around, I would say, about half to 0.6%. But interesting zone. If the bulls keep controlling this, 45.30 is the next resistance zone. So bulls still in control at this stage. US 500, here's the futures. You can see that rally that came into the market open, hit this resistance, and then sold straight back off. So there's a gap here, which goes down to, I think it's like 4,400 and a bit. Let's just quickly look at that. 43.96. So again, bulls might be sitting around 43.96 saying, well, I wouldn't mind buying that zone. but I'd like to see it come down. If it does activate correctly, that could be an interesting area. I'm interested more in the gap, though, that happens on the open, should we see actually selling. Let's move over to Bitcoin. What's going on here? Well, it's stuck in a range, and we're still stuck in a range. So is it accumulation? Is it distribution? We don't know yet. The trend is bullish, so you'd have to always say, well, accumulation is more likely than distribution, and you're looking for the signs in that direction. If Bitcoin does break out to the upside, I could see it being incredibly explosive here because of how much it's been lagging the NASDAQ in ratio recently. And we've talked about that quite a few times. But one of the charts we are watching at this stage. For the calendar week ahead, we've got ISM Services PMI and, of course, unemployment claims and ADP coming out on the Thursday. But the big one is going to be the non-farm payrolls Friday, 8:30 a.m. New York. Make sure you are watching that and you're in the loop in terms of what's going on with those numbers. Also, then we go into the next week, which is going to be the beginning of earnings season, and we've got our big one, CPI is back again. It's like the horror show. Yeah, we always go, oh, it's a big bit of news, and then it's kind of not, but it still is the most important piece of information that we get in 2023 so far. So core CPI Wednesday, July 12th. Remember that. That's in earnings week as well. If you did like today's video, make sure to subscribe, smash that like button, guys. And do remember as well, if you want to support the channel and you're interested, check out the links in the description down below to see the sponsor of today's video, which is Tiger Brokers and their special offers, especially New Zealanders, because the deal is pretty good. All right. Good luck, everyone. Bye now.